So, first of all, thanks for having me. I believe overall what we can see is that the risk tolerance of investor has been changed. Especially the millennials and the Generation X investors are much more risk averse than they were previously to the pandemic. Why is that? I think compared to the boomers, financial goals are not yet achieved. That's why they are more risk sensitive. The other aspect which has changed is the use of digital capabilities, which have been absolutely essential to do business during the pandemic. But it's not all about digital relationships. The clients or the investors really want to have a choice between digital-led, advisory-led, or hybrid as a choice. So we see there an equal distribution across the channels. So offering optionality is really important. I believe there are three main aspects. So first of all, it's about trust. Second, it's about transparency. And third, it's about asset performance. I think those are the three main drivers when investors choose a relationship to their wealth manager or private bank. In addition, I think investors are looking for more integrated and holistic services, which means they would like to have a broad access to different asset classes. Here, especially alternatives like private equity and hedge funds are super important. Then banking and insurance services. Here we are talking about health and life insurance services, which are coming on top. Then third, about financial planning, meaning estate and trust services, or even like highly specialized services around financial education or healthcare are getting much more important. Then it's also about cost, right? So clients are still concerned about the hidden costs. So having their transparency is increasingly important when clients choose their wealth manager. That's a good question. So I think the good news is we are still in a growth industry, meaning like global assets are increasing. However, we can also see that the not so good news is that margins and profitability are shrinking at the same time. So many of the institutions do not have a solid equity story, which is also often reflected in the share price. So I think financial institutions do have to fundamentally rethink their operating model to better manage costs, but on the other side also having a good business model to drive profitable growth and top line. So meaning how to use technology and automate the business at the same time creating value for the client is going to be extremely important. So I do believe that the basic services do have a tendency to get offered for free. I think where you can apply technology and automate in a way that a service can provide it at a lower cost. This is a development which you cannot stop. So the market will drive the price. I do expect. So it's all about creating value, and what we've learned from our research is that clients are willing to pay for better experiences, and better experience could be that they have better access to a wide range of products, that they have a holistic perspective on their wealth situation, that they have better personal and better reliable digital capabilities available, or also that they get additional services like financial education or trainings, etc., etc. So I think they're being able to provide value-adding services on top is where clients are willing to pay more in the future. Yes, I believe there are two main aspects which I would like to highlight here. So first of all, the use of technology. Here, expectations are shaped outside of the financial industry. So it's really how we use e-commerce platforms, how we travel, how we Uber, how we use Netflix. I think there are expectations with respect to digital interaction with the financial institutions are shaped from the outside. I think that's something which is going to be increasingly important. The other aspect is our research has shown that clients, especially younger clients and next generation investors, they are looking for purpose and sustainability, and this is really at the very high magnitude. So over 90% of investors are looking for purpose and sustainability when it comes to investment. So really looking for purpose higher prioritized than investment returns. On the other side, and that's the downside, I think only 50% of the investors do feel that the financial institutions does understand their needs when it comes to sustainability. So a big gap which institutions have to close. Yes, so I believe there's a trend for holistic and integrated services. And I believe no financial institution is able to build and develop everything by themselves at the pace the client demands that, and also from a pure investment perspective. So being able to open up the platform and to collaborate with fintechs and regtechs and other technology providers or other banking providers is going to be increasingly important. So having a clear understanding of how they want to participate in the platform economy is of utmost importance.